phrase you mentioned, which I think is really something you want to dive into, is it empirically defensible? And we never really thought of that until Reg BI came around. So uh, how does InterGen Data feed? You're not you're not a financial planning tool yourself, but you feed other tools with your data and your analysis. So how does your data and your analytics make other tools better at empirical defense?
Yeah, so that's a really good question, and you are spot on. We are not a financial planning tool. We are not a risk tool. We are extra data elements that we believe should be incorporated into those products and to help make them more contextually relevant and then help make their predictions and their models more accurate. So, as an example, what we did in this proof of concept, we took in almost 12,000 variable annuity transactions. And yes, of course, we were able to process it in under 15 minutes. But what we did is we took a look at the reputational, regulatory, and financial risk of the company. And when we ran these algorithms on top of their transactional data, we were able to instantly find, okay, you do not have enough risk tolerance information across some time horizons are missing, some age is missing, some incomes aren't correct. When you look at them in comparison, they're not quite there. What I mean by that is, out of that original approximate 12,000 transactions, 92% didn't have enough data. So right there, we meant here is empirical evidence that says you need to go do a data cleanup and get your advisors and your people to go back and ask more questions. Find out if this data is really true or missing. And if it's missing, okay, fulfill it. Now, of that, there remained about 1,000 transactions we were able to analyze. And 45% of them were in compliance. And we said, hey, these are straight down the middle. They're not risky. These are pretty decent, easily defensible, we like to say. But of the ones that weren't, about half of them, right, we turned around and said, here's some moderate risk. These need review. And what I mean by that is two things. Whether it was the risk tolerance of that person does not match the account goals or does not match the age or the income. This is standard type of compliance. But when we turn around and say, oh, by the way, 23% of these people are likely to get cancer or have a heart attack, and here's what that cash flow is. That's based on 4.2 million people like them, 3.6 million people like them, because we took the US data that we gather, the 140 million rows of data that we have, and say, this is typically what happens to this type of a person living in this area, of this race, of this gender, of this background. This is something you need to incorporate. So when I say empirically evidence, it's not guesswork. It's saying, hey, this is based on government data, on US data, and your client data. Now you can go back and say, these are the reasons why we did or did not evidence why we should want to, let's say, purchase an annuity, if that makes sense.
It makes complete sense, and that's the defensible part, that you show the
Yeah.
data, you show your work. Here's how we got here. Here's why we're saying this. It's not just a guess. It's not random. It's not based on faulty assumptions or opinions. It's based on actual data that we've analyzed and reviewed. And back to the clean part, I was recording a podcast earlier, and we talk a lot about data, and just that part of your business model where you force the client, whether it's an insurance company or a wealth management company, to look at their data and go, 92% of our data is not clean. 92% of our records are missing something. That's hugely valuable to them. And that's, they would not know that until, if they didn't go through this analysis, and they wouldn't realize it until it's too late. Like when they needed some information, they needed a report for regulatory or other issues. Now you've shown them that. So it gives them a huge jump on getting their data house in order.
Yeah, absolutely. And, you know, first knowing, and that's the part about the proactiveness that the SEC is asking and what FINRA is asking for. Even recent news announcements talk about, hey, we're going to, Gensler said, we're going to enforce Reg BI as it exists. Well, that means they're going to start looking for evidence. They're going to start looking for why you recommended something and how you recommended something, because they're looking for data. They're looking for what is the model. And it's not just a person's guess or an advisor's educated guess. Here's some evidence behind it. And if you don't have that information, then go clean it up. It's not a bad thing. It's a good thing. It means you can go get it done. And it gives you the ability to be proactive and not reactive. And that's what the regulators don't want to see, is you constantly being in a reactive state. They want to see you actually going out and doing something about it.
Yeah, it's another reason why I really like what you guys were doing at InterGen Data, because my company, Ezra Group, we have launched a series of data as an asset assessment products. They're consulting packages to review broker dealers, insurance companies, and other firms, their data, but looking at it as an asset and doing these kind of cleanups, these reviews of infrastructure, frameworks, overlapping, data models and things. And the fact that you're doing that already is huge and provides a lot of value to companies.
Well, thank you. We hope so. So we're looking forward to seeing this kind of version into some more revenue for us as we go forward this year.